let's put it this way. About 70%, I believe, of new issued treasuries are purchased by the government. That means if the Fed stops buying treasuries and the deficit doesn't change, somebody else has to step in and buy those treasuries. And if they're not willing to buy the treasuries at the current rate, then the rates are going to have to rise. If there are no bids in the market, then the sellers will have to lower their offering price. So that's the last factor that's involved. That will undoubtedly raise costs for the federal government. And to pretend that the Fed has now interjected itself directly into the functioning of the federal government. This is another, and probably I think the most dangerous effect from quantitative easing. It becomes a factor in the finances of the federal government. As before, Fed policy was dictated by the needs of the economy, not by the needs or even the consideration very much of the needs of the federal government's own finances. But quantitative easing has put the Fed right in the middle of government policy and in government financing. That's another issue for the Fed. And to pretend that they're not aware of this is not realistic. So where are we left? The economy is a bit better. It's certainly a bit better, but it's marginally better. I mean, I didn't bring did I bring any charts on non-farm payrolls, which is, of course, what we're all looking at? I don't think I did. So I'll have to deal with it. We all know. The 3-month moving average, I believe, in non-farm payrolls has moved up to about 200,000, which is about where it was at the end of last year. It came down through the year. In the second quarter, down to about 180. So when the Fed was considering, okay, I'll end in a minute. When the Fed was considering and came to the policy, which it announced on May 22nd, of tapering QE, the job creation was lower than it is now. But again, 20,000. 20,000 is not a significant indicator of anything in non-farm payrolls. So we have an economy which is marginally better. We have a federal government dependent on the Fed to some degree. And we have a Fed board, governing board, which has recently reversed itself, has a new head whose focus has always been on the economy, not inflation. So where does this leave us? I know that the run of relatively better statistics over the past 3 weeks, since October 23rd, I believe, has led to increased speculation, or at least increased comments, that the Fed will taper QE in December. I do not believe it. As a matter of fact, I do not think that the Fed will taper begin tapering until the end of the first quarter. Now, I was also dead wrong on September 18th, myself and everybody else. So I'm no longer so sure, but I would have a very hard time thinking that the Fed will reverse itself yet again after not doing what was expected on the 18th, to reverse itself yet again 8 weeks later, I think is a bridge too far for the Fed, and certainly a bridge too far underneath Janet Yellen, assuming, of course, that she is confirmed, which I believe she will be.